All right, welcome back. Welcome back, everybody. I'm going to keep it in. Total transparency on this channel to Altcoin Daily, where you subscribe for a video on cryptocurrency every day. My name's Austin, and like always, let's get to the news. The SEC chairman recently sat down with Andrew Ross Sorkin at Times Talk, and he stated in the interview, very blatantly, by the way, that Bitcoin is not a security. I like that. Anytime Jay Clayton, the SEC chairman, or the SEC in general, anytime they say anything, openly and publicly positive about Bitcoin, I think that's a huge green flag for the market. But that's not why I'm bringing you this news article today. Because they've said, and just very recently in the past year, they've come out with similar positive statements about Bitcoin. But the reason I'm bringing you this article is because Jay Clayton went on to talk about how the cryptocurrency market in general is going to fare under the regulation of current security laws. And this is significant because the security laws that are in place right now were created in 1929, obviously before the internet was invented, let alone Bitcoin, and Jay Clayton addressed it. So let's get into it. Jay Clayton, the chairman of the SEC, recently spoke about the reasons Bitcoin is not a security and the history behind the commission's security laws. He also spoke about the commission's current stance. On the blockchain and cryptocurrency space. So a lot of valuable insights. The first one, obviously, being that Bitcoin is not a security. And why is that? Why isn't Bitcoin a security? Well, according to him, the reason that Bitcoin is not a security is that Bitcoin is widely distributed and that it's not controlled by a single entity or other people. So that's obviously the best insight to hear. He gets it. No central government owns Bitcoin, and it's not controlled, by any specific government or persons. And yes, some of you might be saying, hey, Bitcoin is a little bit centralized. We saw the huge Bitcoin Cash, Bitcoin SV debacle. It was obviously manipulation took place. It might have been a little centralized. And to me, what we saw is, yes, in Bitcoin, in crypto, there are pockets of centralization. And, obviously this is not ideal, but it's a lot better than a lot of other options out there, like corrupt governments and such. But, the general takeaway is that Jay Clayton, even in the most bearish times, when everybody else, the mainstream media, is condemning Bitcoin and cryptocurrency, they're still, saying positive things about it. That, to me, is worth something. But anyway, he went on to talk about cryptocurrency and how the current market will fit into the 1920s regulation. What do you think? Well, he said that Bitcoin and blockchain should fit into our rules, not change them. Not as much of a green flag, but let's read on. Here's the direct quote. Technology ought to be able to fit into our rules. And I think this technology has incredible promise for adding efficiency to our marketplace. But I'm not going to change the investor protection aspects of those offering rules or those trading rules just because there's a new technology. Interesting. The two things he's saying is that, yes, the technology has incredible promise for adding efficiency and value to our marketplace. He gets that, but he's still saying that they're not changing the rules and cryptocurrency has to adapt to them. And I can understand that in certain aspects, but I think there is a give and take here. When you have regulation that was put in place in the 1920s, and now you have the internet, which was invented after the 1920s for sure, and cryptocurrency, to me, I think there needs to be a little ebb and flow. What do you think? And just to be very clear, we don't need Bitcoin, because it's decentralized, because cryptocurrency does not need SEC approval. It doesn't. But it would sure help. If the SEC totally condemned Bitcoin and cryptocurrency and said, no, they're the devil, it would hurt the market in the short term. Well, I think Bitcoin and crypto would survive, but it's good to see them changing in general. And I guess I want to end this little debate by bringing a statement that Jake Chervinsky, a very smart man, a lawyer, I follow him on Twitter. I find a lot of value in him because he talks about cryptocurrency from the regulation and the law side of things. I kind of agree with his statement that he said a few days ago. In the last 2 weeks, the SEC chairman spoke at a crypto conference, and the SEC commissioner went on a podcast called What Bitcoin Did. Both were generally positive about the industry. This is huge progress, and I don't think it's getting the attention it deserves. So essentially what he's saying is, this is something we would not have seen 18 months ago. In the most bearish times when the mainstream media is, and everybody is condemning crypto, the SEC chairman is actively going to crypto conferences. He doesn't have to do that, and speaking generally positively about it. And the SEC commissioner is going on Bitcoin podcasts and speaking positively. This tells me that, Bitcoin, this just gives me more of a green flag that Bitcoin will be around longer than if they hadn't been saying those positive. You know what? I'm going to keep that stutter in. Total transparency on this channel. Let me know what you guys think about this. Big green flag for me. And, Bitcoin isn't dead, no matter what the mainstream media tells you. Let's keep going. I have 2 more news articles for you. The 2 biggest things making headlines today, and then we'll take a live look at the market. So let's keep going. Short take. Bitcoin mining just got a lot easier. So this is interesting because, as a lot of us know, we used to base how far the market would go down based on, Bitcoin, the level is usually the amount of money it takes to mine a Bitcoin, and that level is around 6,800. So now that Bitcoin is below that level at 3,900, in order to mine Bitcoin, you have to take a loss, and that weeds out a lot of the smaller mining groups, but it puts a lot of FUD in the air. People asking the question as well, if the miners can't mine profitably, is Bitcoin dead? This article shares some insight. Bitcoin's mining difficulty just dropped 15.1% today, and this article just came out today. This means it requires 15.1% fewer hashes to mine a new Bitcoin block than it did yesterday. It's getting easier and less expensive to mine. The last time Bitcoin's mining difficulty dropped so much was many years ago in 2011, when it dropped 18%, as opposed to today's 15%. And at the time in 2011, when it dropped 18%, Bitcoin was trading at roughly $2. Well, back in 2011, within 60 days, 2 months after that huge drop, from the mining difficulty drop, Bitcoin was trading over $5. So this article is drawing some parallels, saying that 60 days after the huge drop of 2011, Bitcoin more than doubled from $2 to $5. And what do you think? Just to sum this up, to make it very clear, the genius of Bitcoin's mining difficulty adjustment is that every drop in difficulty gives previously unprofitable miners new life. When mining difficulty goes down, it becomes easier and more profitable to win block rewards. Bitcoin didn't die in 2011. It's not dying now. And I'll leave this link in the description below for you to check this out for yourself. But that's the beauty of Bitcoin. If their miners aren't mining, then it's going to make it easier for miners to be able to come back on board. And we're seeing lows right now, but in 2011, obviously they wrote it out. They went down to new all-time highs of $5. Let me know what you guys think. Before we do a live look at the market, if you've gotten value from this video, feel free to like, feel free to subscribe. We drop a video every single day. You do not want to miss one. All right, the last piece of news, and I'll make this quick, and this just dropped a minute ago, but Ethereum giant ConsenSys tightens its belt and will axe underperforming projects. And this is just, I wanted to bring this to your attention because while we're seeing great news all around us, There's no sense hiding it. We're in very bearish times, and a lot of projects, crypto projects, are either ending or tightening their belts. Ethereum development studio ConsenSys, the New York-based blockchain startup, is restructuring as part of a move to streamline its business amid the crypto bear market. So we're seeing this all over, right? We saw Steemit the other day lay off 70% of its staff, citing the crypto bear market, because these companies, they got, not Steemit per se, but they got in, in the euphoria, or they upped their business in 2017, the euphoria, and we're finding that they can't last when the market gets lean like this. And ConsenSys right here for Ethereum is no different. In a direct quote, we must retain, and in some cases regain, the lean and gritty startup mindset that made us who we are. Lubin, who's the head of ConsenSys, said that the sprawling Brooklyn-based startup, ConsenSys, this is what they'll do. They'll eliminate underperforming projects and place a renewed emphasis on creating tangible value. Obviously, the three things they will now just be focusing on is revenue or return on investment. Obviously, they're a business. Benefit for the Ethereum ecosystem, and social good. I like that. I guess the point of this team is this is just the start. If this bear market lasts into the next 6 months, maybe even 12 months, we're going to see a lot more of this. Now, ConsenSys is making a defensive move. They're tightening their belt so they can maintain and they can keep going. We'll see a lot of companies, I think, ending if this market continues. Let me know what you think. Let's end the video today by taking a look at where we are in the market now. All right, when I started this video, this was at 125. Now we're at 126. Slight increase of $1 billion, but the market is still at a low. One Bitcoin costs $3,900. We couldn't really support the 4,000 level support line. We seem to be dipping under. I think we might be going a little lower. But if we look at the top 10, everything is in the red. Bitcoin is down 6%, and Cardano is down 7%, and EOS is down 9%. I guess the biggest winner today in the top 10 is XRP. Sometimes centralization works, team. And let's end the video by checking out where we've seen Bitcoin in the last 4 weeks. Hope you get value out of this stuff. I hate to have dead air like this while this is loading, but let's just check this out. I think this has some value. Let's check out Bitcoin in the last 1 month. For the last 2 to 3 weeks, we've only been going lower, and it seems that we can't support any positive flux in the market. I guess if I'm looking forward, a lot of people say that 6,000 is the ultimate next support line to see if Bitcoin will not go into new all-time highs until we crack 6,000. It's a bear market till then. But if we're looking at the short term, the next thing that I'm seeing is the next support line in the bullish direction is about 5,600. Wow, long way off from there. I suspect that we might be even getting lower into the bottom portions of 3,000. Anyway, team, that's the video today. Feel free to give it a like, and like always, we'll see you tomorrow.